Boy, that time flies when you're having fun, doesn't it? Welcome back. Welcome back. It's about that time of day again here, folks. Time to get back to work for tomorrow, Tuesday evening. It's August the 24th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background, as you can see. S&P's ready, Nasdaq's ready, gold is ready. Glad to see you are ready right along with us. Well, we got the ranges we're talking about in last night's video. You know, big moves up yesterday. Are we that surprised? See some range-bound, sideways, choppy markets today. The market's kind of catching their breath, right, after such a big run to start this final full week of August on yesterday's trading session. We got a bunch of ranges on the charts tonight. That means we're trading rotation, we're trading failures, we're trading breakouts. I'll tell you, I got a couple nice setups for possibly some reversals tomorrow. I'm looking at gold. I'm looking at the S&P. As always, though, I'll make sure we're ready for whatever the market throws at us. By the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some of the stuff to avoid to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow in our daily trade room. Now, of course, before we jump in and get a hands dirty on this chart, lots to cover here tonight. In this video, getting ready for Wednesday's trading session, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this YouTube channel, so make sure you subscribe. I don't want you to miss tomorrow night's video and the rest of the month of August. If you have any questions, drop those questions for me. I'd love to answer any questions you might have. Don't be bashful dropping those questions in the comments section. And as always, I appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoyed making it, hit that like button, that thumbs up here for us on this YouTube video. Really appreciate you guys carving some time out with me every evening on this nightly newsletter. But let's get this intro out of the way. Wednesday is right around the corner. Hope you guys had a fantastic day out there, but as you guys know, we're only as good as our next trade setup. Time to get back to work here. S&P's here, Nasdaq's here, gold's here. Lots of ranges you can see here on the charts in front of us, and it comes no surprise, right? I mean, we should not be surprised. A little bit of summertime market today, a little bit of not exhaustion, because the bulls definitely held this thing up pretty well. But again, with that big move we saw yesterday, like I said, you anticipate big move yesterday, small, tight, narrow, range today here. So, again, when it comes to, as we always say, when it comes to ranges are magnets, right? Ranges are magnets. So the goal right now is to buy low, right? Buy low, buy low. Now, it's not going to be as easy tomorrow buying low, and we'll talk about why that is the case. We have some rotation off the high on the S&P, rotation off the high on the gold. Nasdaq probably looks the best out of all of these bull markets. I'll talk about why I think that is the case in this video as we go into it. But I definitely do want to buy low, want to buy low, want to buy low. We also, of course, want to sell high, right? Go up. We can sell high off these highs. Absolutely. In fact, all three of these markets have some great potential shorts coming off that high. And as I mentioned earlier, with the rotation off the high on the S&P and the gold, we have one of those potential slingshot reversals setting up here for tomorrow. Now, we're obviously not going to sell this thing just yet, right? We're not going to be looking for that full-blown reversal yet, but tonight we'll talk about kind of the situations to keep an eye out for tomorrow that would tell you these buyers are done and when it's time to get aggressive on the short side, because we got some big targets waiting down below. So as you can see, a lot to cover in this video. Make sure you watch the entire video all the way through, because we'll cover different variations as we go to different markets as we go. Let's double check first before we jump into the charts here. Let's grab a look at the schedule for tomorrow. Tomorrow is a Wednesday, and of course, as I mentioned in last night's video newsletter, we do anticipate there to be an increase in volatility as we go deeper into the week. We're going to probably start getting a bit of a taste of that end of month volatility, even though the end of the month is next Monday and Tuesday, end of the week, end of the month. We'll start seeing that on Thursday and Friday this week. Tomorrow is probably one of the most maybe questionable days for tomorrow as far as what type of personality we're going to get. Will we keep going range bound tomorrow? Will we get some breakouts, some reversals? So tomorrow is kind of that middle of the road. We'll see how we do as far as the personality goes. Big news tomorrow, durable goods orders, 8:30 Eastern time. That's a pretty big news report. We've seen the manufacturing numbers really decline over the past few months, or the past few weeks at least. Be interesting to see if those durable goods orders follow that new bearish trend when it comes to manufacturing. That is definitely the big news of the morning tomorrow morning. Now, keep in mind that 8:30 news report hopefully will get us ripping tomorrow. But remember, I've talked about this a lot over the summertime season, the month of July and August. The best setups we've been seeing in our trade room have been between 9:30 and 11 o'clock Eastern time. So even though I'm hoping we get a nice little shot of volatility, of volume coming in early tomorrow morning, as you know, it is summertime trading, so sometimes it's a bit of a slow start to the morning. 9:30 to 11 o'clock. If you can only be at your desk tomorrow for an hour and a half or so, that is the block you want to be there. Now, of course, don't forget, every morning this week, Monday through Friday, we'll be trading this stuff together in our trade room. We open up every morning at 8 o'clock Eastern time. I'll put the membership link you guys need right below this video on our website, or I'll put a link in the description of the YouTube video. Make sure you get registered. We open up at 8 o'clock Eastern time, Monday through Friday, and we'll have a front row seat for that durable goods orders. And hopefully we get some fireworks out of that news report tomorrow to kind of set us up here for that run between 9:30 and 11. You know what? As always, though, right, we are traders, so we'll take whatever the market gives us. Let's get back to our charts here. Got a pretty good plan of attack for the news tomorrow. What's the plan now for the charts in front of us? S&P, Nasdaq, and gold is here. Why don't we grab the S&P first, as always? And don't forget, I'm going to put some chapters at the bottom of this YouTube video. So if you, again, a lot of you guys I know will watch this video all the way through. And then, of course, go back tomorrow and pick and choose those chapters as far as, which market you want to drill down into and get some more review on. So definitely use those chapters as you see fit. What's the big, what's going on right now on the S&P? Well, we know we're bullish. Right? The bears have had no luck whatsoever. In fact, the bears had that beautiful potential with that shot going higher. And I thought this morning, perfect. We're going to see some nice short going lower off that pendulum swing. But as you can see, it was nowhere to be found. The buyers continue here to hold this thing up very well. There are pretty much two main components on this chart right now. One, of course, is that trading range. It's a bull market into a trading range. And, of course, ranges act like magnets, right? So our job is to find levels of support like triangles or expanding triangles, right? Find levels of support like pendulum swing levels that I can buy underneath that trading range, right? So buyers, of course, want to buy at support. At the same time, though, because that range, of course, acts like a magnet, we can also find levels of resistance up overhead, like expanding triangle highs, like prior highs, and we can sell off that high, right? So we definitely can use the buy side and the sell side trying to go back down into that trading range. The second kind of component in this major component is this channel. It's a spike in channel. The spike in channel here has come together pretty nicely in the last couple hours here this afternoon. You'll notice, of course, that strong spike up. We pull back, we go up, we pull back, we go up. Look, notice that rotation, right? See how beautiful that rotation is. Now, spike in channels are pretty important. What do they tell us? They tell us look for a pullback into the base of that channel. Right? Spike in channels, in my opinion, are one of the top 5 chart patterns you really need to learn, especially if you're a new trader, because you see a lot of these in our trade room and, of course, pretty much across any liquid market. So think about this area now down the base in that prior low, that area, that's where these buyers are going to want to be buying that dip. So the spike in channel actually lines up pretty well with that trading range. The third component, right, which is not a major component, but it is a very important part of this analysis. If we understand rotation, and we'll talk a lot about rotation throughout the entire video tonight, because whenever there's a range in the chart, rotation is going to be a factor. Now, of course, at this point now, we have the market rotating back and forth, right? We go up. Now, as we rotate down off of these highs, right, we call this rotation off the high. As I mentioned earlier, I thought this morning, I thought we had a great shot to get short early this morning. When I saw this spike higher, and then obviously when the spike goes up, we can measure the amount above, we can measure it back down again. And I mean, I was expecting this thing to just rip, right, and run at the very least, right, down to that pendulum swing. When it didn't, I was kind of surprised. I was pretty impressed by the buyers that were holding this up. And of course, it went into this, kind of death spiral, a very quiet, very low volume environment all day. It wasn't the most exciting day to trade. It was kind of, unfortunately, the downside of a summertime market. Take the good with the bad. Sometimes the markets are pretty slow in the month of August. Does not mean you can't trade them. You can be selective as far as when you are trading them. But long story short, though, whenever a market goes up above a range like this and now starts coming down, what happens is we get a lot of momentum. Momentum really builds as it goes. And I had this kind of term I like to use in my trade room called a slingshot reversal. And it's pretty simple, right? We get the range, we go above the range, we come crashing back down, and instead of holding the pendulum swing, it just keeps on going, right? And we get a breakout on the opposite side. So what you want to think about is yes, I want to be buying down here, but I mean, if we end up running lower and this thing keeps on going, right, we know what's going on. It's giving you that, again, kind of what I call a slingshot reversal. So that's why I said earlier, the S&P and the gold both have potential to this. And we get some really, obviously that big move up yesterday, we had some really big potential reversal targets going lower here for tomorrow. So I'm very excited for tomorrow, especially since today was so quiet, low volume. There was, I think, less than, 800,000 contracts traded on the S&P today, right? Look at that volume number, right? 770 for the entire day today. So very low volume. So hopefully that volume will come back in tomorrow and give us some nice opportunities here. All right, how do we buy it? How do we sell it? What if it goes up? What if it goes down? Let's get our hands dirty on this and let's think about what the situation is. Now you'll notice right away the prior all-time high, that 76.5 area, has definitely been kind of a boon, right, for these buyers right now. So the first thing I'm looking for here is a shallow pullback. If we see a shallow pullback, remember, you always want to look for traps. So if we do end up, taking out that prior all-time high, you want to wait for those bears to come in. And in this situation, again, you got to be careful because you don't want to buy too high. I don't want to buy inside that range. I do want to keep my options open, though. So as a shallow pullback comes in, again, I'd like to be buying way down here. Shallow pullback comes in, let them try it once, let them try twice, and the goal will be to use a trap setup, right? Trap setup on a shallow pullback. One of the things we'll talk about in our video classes here at School of Trade is shallow pullbacks. You're buying relatively high, so you want to do whatever you can to get in as low as possible, and a bear trap entry will be great on that. Remember, think about the 2-try rule there. 1 try, 2 try, and that bear trap. So shallow pullback, bear trap. This is especially important if we were to go back into that range like that, right? That would definitely be really important if we saw something like that. So shallow pullback, right? Bear trap, and we're looking for that run going higher. If we go lower here, the bears now start to pick up steam, right? And this is where we have to respect the momentum. Like I said before, let them try twice. So as we run lower here, and honestly, this could be here, it could be here. It really doesn't matter where it is to me. If I get down underneath this prior all-time high, I'm looking at these bears now going, okay, they're coming at me here now, rotating off that high. I'm now going to wait for those bears to try once, try twice. Now we don't need the trap in this example because we got plenty of space to go higher, but it certainly wouldn't hurt if I can get that trap off that low. That is, we call a 2-try failure. Honestly, though, we really don't need that trap. For example, if I get a trend line off that low, I can buy off that trend line. What you want to remember is that as the market rolls lower, a lot of sellers are going to feel that momentum turn. They're not going to give up with that much of a fight. So you want to give them a couple tries, but then once they dig that grave, right? Once they wrap that rope around their neck, their stops are right above that high. The range acts as a magnet, and now they can look for, as we mentioned in last night's video, we can look for that failure into pullback combination and get that run going higher. So these can be some setups to watch for tomorrow. So again, it's a 2-try failure. Again, into that pullback as we go. And then again, measure the amount down, measure the amount up, and that creates a nice, easy objective on the opposite side of the market. Again, this setup can really happen. It could happen really anywhere down in this area. Now, here's where you got to pay attention. And this is where a little more experience comes into play. So make sure you come out and join me tomorrow morning in the trade room. Let's say we do end up running lower. And then let's say the sellers start to grind this thing down. Okay, that's your typical way you're going to see that slingshot reversal. What's going to happen is it'll run lower, but then instead of seeing the bears try once, bears try twice, and giving us that failure back up again, what'll oftentimes happen is it'll be a shallow pullback and start to really run, right? It'll really run. Now, when that happens, now you've got, for whatever reason, the buyers are failing on this, the sellers are taking it over right now. And now what I would do is find a new channel, right? Find a new channel and then combine a trap entry off of that channel high. Okay, so again, step 1 is wait for that nice deep pullback. Step 2, wait for the sellers to hold the pullback and not necessarily jump off the moving average, but start to grind it lower. That's usually what these will feel like. It'll be grindy because buyers are getting out. It's not really sellers who are selling it. It's the buyers back here who are getting out. That's why it grinds lower often when these reversals start to happen. That will be a definite setup. We call these 2-try breakouts. I'm not sure where that number 7 came from. 2-try breakouts there, right? Again, it's going to be that 1-try, 2-try, and that trap right off of that high. That would be a really nice reversal for us here as we go. And then at the same time, let's say we do take out that pullback. Let's say we do pull back to the moving average and we just jump off the moving average, right? That makes our job even easier because once we jump off the moving average, then we know the trend has really turned. Anytime we see a 1, 2, 3 reversal pattern, now we mark up that low, we mark up that high, and then remember, we're going to drill down to a faster time frame, and I want that first test, right? First test is always the best test. Now remember, this is a 6,000 tick chart here on the S&P 500. We're not going to use a 6,000 tick chart to sell the high of that channel. I'm going to drill down to a much faster time frame. And my two favorite, your 3 most common are going to be failure setups, trap setups, and pullback setups off of the moving average coming off the top of that channel. Now, I'm not going to go over the time frames to use, how to find the channel, how to trigger the entries. I do cover all of those entry techniques that are really kind of the missing piece to this video tonight. I cover all of that in our Quick Start class. We have a great free trading class on our website, right? I call it the Quick Start course. It's a shortcut class. It'll bring you right up to speed with all the charts you need, the indicators to use, how to find levels of support and resistance, and then how to combine those levels with my 4 favorite price action setups. We don't use indicators for our price action strategy. You'll learn all the details in that Quick Start class. So now we get a pretty good idea of how to trade this thing as it goes lower. What if it goes higher here right now? Going higher is the easy part because, of course, we are a bull market. The two main kind of breakout patterns you would look for, and as you can see, you don't want to trade breakouts right now. The two breakout patterns I would look for here is one would be the easy one, the 1, 2, 3 breakout. Just like a 1, 2, 3 reversal, a 1, 2, 3 breakout starts off with a strong pop higher, but then it holds a pullback and jumps off the moving average. Now remember, it does not matter how big or strong that first pullback is, right? Example A, example B, example C, right? We don't need, right? One back there, right? It doesn't matter how strong the breakout is or how big the first leg is. All that matters is, can they hold it? If they can hold it with that 1, 2, 3 breakout, that confirms now the momentum. Again, I'm not going to buy that first pullback for 1, 2, 3 reasons you can clearly see there over on the left-hand side. What I will do, though, is I'll mark up that high. I'll mark up that low. I will drill down to a faster time frame, and I'll grab one of the 4 price action setups I talk about in that quick start class. You're going to love that quick start class. I provide hundreds of examples of those setups on our favorite markets. So you'll see how I apply them. It's really, really cool. You'll love it. So that's one way to do it. Another way to do it is let's say we see the market really push. And then we see that shallow pullback. Shallow pullback barely touches the moving average. Then we see a higher high. Again, right? Remember, strong leg up, not enough. Strong leg up, no, not enough. Got a hold, and a little bit of a higher high. Again, strong move up, shallow pullback, higher high in price, traps, baby. We call these 2-try traps or 2-try breakouts, right? We talked about this earlier on the way down here. This is one of my favorite setups, especially right now during kind of low volume summertime markets. One of my favorites as we go higher. Where would the next objective be for the buyers? You got 4,500. You've also got the next leg is way, where is it? It's way up there, 45, 44. There's a lot of space, as you can see. So we're going to have to be careful. Well, not be careful, but here's an easy rule of thumb. Once you get the breakout leg, that breakout leg will typically become the measuring leg. Okay, taking notes right now, write that down. When you have a range, the breakout leg becomes the measuring leg. So once we know what the breakout leg looks like, then we'll know where the measured move is, and that will give us an idea of where that next target is. Unfortunately, I can't give us everything here tonight. We'll have to wait and see what we get in the overnight and the pre-market tomorrow. How do I sell this market? How do I sell it? Well, first of all, you're going to definitely want to make sure you take out, I would like to see take out those all-time highs. Right, get those all-time highs taken out. Now, great place to get short, right, at a level of resistance above the range. What's the problem, though? Momentum, right? Momentum is way too strong. You always want to ask, how is my location and how is my momentum? You know, these are two questions I'm always asking. You guys probably hate hearing this stuff all the time in the trade room, but I'm always asking, what does our location look like? Good location? Okay, how's momentum, right? Momentum, location and momentum have to jive, right? They got to make sense together. So location's great, right? Sell at resistance, back into the range. What's not so great? Momentum. So how do we sell this thing while respecting momentum? We let the buyers try once. We let them try twice. And as I mentioned earlier, I can draw a trend line right off that high. Remember, stops are now sitting right below that low. And again, these are pretty exciting opportunities because if you get that nice juicy signal candle coming off that high, I can sell into those stop losses. And remember, all the stops now are sitting right below that low. So a nice strong signal candle, all those buyers who bought that high, they're not going to let this thing go against them too far. They know they're already playing with fire, buying the highs. Now stops get run. I can short off the high with a 2-try failure, or in this case, a 2-try reversal. And then remember, if it really starts to punch going lower, you can mark up that low, you can mark up that high, again, drill down and find that entry off the high of that channel. Again, traps work great, failures work great, pullback combinations. We oftentimes see the market go up, look for a failure into a pullback combination around the moving average. Again, you'll see a lot of examples of that stuff inside the quick start class, so make sure you grab that as well. And then as you can imagine, the pendulum swings in the other side direction, and we may see that market go all the way back down side. All right, so now we got some good breakouts. We got some good failures. We know how to trade the reversal. Got some more variations coming your way here as we get later on in this because the gold also has something similar. Let's keep going here. S&P, pretty straightforward here. How about some Nasdaq? Nasdaq is probably the most bullish out of all of them, just because we're not dealing with some failures off the high like we are on the gold and the S&P 500. What do we know right now about the Nasdaq? Well, it's kind of similar, right? We got a bull market here and pretty much into a trading range. Again, no surprise there. At least it shouldn't be a surprise there. The middle of this triangle, if you will, right? The middle of this triangle is considered the magnet. And so if we do end up getting short above the highs, getting long below that low, that 15.354, 15.353, give or take some ticks here and there, we'll call it 15.354. That will be kind of the objective. That will be the target as we try to go back up or back down into that trading range. Again, it is a range, which means the range, of course, acts like a magnet. We are bullish, of course, so I want to buy at support levels below the trading range. I can definitely sell at resistance levels above the range, but like I mentioned on the S&P, got to be careful because momentum is clearly very bullish. Now, what is really cool about this one is if you can take the low of that triangle, project that up over these highs, you can begin to really see where this market kind of wants to go here, right? I can also anticipate that 442 level up there is definitely going to be on our radar as well. As you can see, this is a little bit different. This is a triangle. The key to a triangle is you want to trade the edges of the triangle, okay? The edges. So basically these two areas right there, okay? Stay away from the messy middle and trade the edges. So if I go higher, I'm looking to sell off the edge high. If I go lower, I want to buy off the edge low, right? I also included this big buy zone down here because really any pullback at this point will likely be seen as a buying opportunity. So how do we buy it? How do we sell it? What if it goes up? What if it goes down? You'll notice I marked up this swing back here. Okay, we talked about on the S&P that prior all-time high. The prior all-time high on the Nasdaq's like way down there. That's going to be a ways to go. Possible. Doesn't seem probable, though, for tomorrow. So, again, remember, shallow pullbacks, okay? Shallow pullbacks, look for traps, right? Shallow pullbacks, look for traps. And then don't forget, if the market traps and runs like that, okay, mark up that high, mark up that low. Remember, if you have enough momentum, don't worry about where you are. If we get that trap off that low, there's a very good chance if this thing rips going higher, we're going to get that entry off the low of that channel. Again, this is a 4,000 tick chart, okay? We're not going to trade off that tomorrow in the trade room. Right, we'll grab a trap, but we'll definitely drill down, find those failures, find those pullback combinations, okay, off the low of that channel, and then we'll see how far that sucker can run from there. If we really do pull back, right, let's say we go into kind of battle zone. Let's call this battle zone number 1. I'll make this a little bit lighter or darker. Yeah, let's call that battle zone number 1. Battle zone number 1, momentum is not going to be very difficult on us. So we're looking for your typical failure into pullback combination. Now, I mentioned this combination setup earlier. These are very, very common, right? Very, very common in trending markets, in range markets. Basically, as we get underneath the moving average, we look to rope in, right, some of those bears. Get those bears to sell short on that pullback. Once we get down into that, again, into that buy zone or the base of that, or the edge of that triangle, the bears come in, they think we're going lower. For whatever reason, they try to sell short. The stops are sitting right above that high. I always tell my clients, right, hit them where it hurts. Look to buy into where those sellers are getting stopped out. That's going to be where the easy money is made. From there, we make that move higher. The buyers now go, okay, we're back with it. And as soon as it pulls back, the buyers will come in for another shot at it. Again, failure into pullback combination. And the same thing, right? You can always go out, grab that new channel, grab that first test off that low. That combination is very common and very reliable going into this. So just watch for that run. And the key is the strength of that move. That's the key. If it has a lot of strength to it, it's almost a guarantee. You'll at the very least, you'll get that first profit target off that pullback. At the very most, this becomes a breakout and becomes a measured move, as I mentioned before. Now, the next scenario is kind of what I hope happens tomorrow, but it's going to be a little more difficult to time the entry. So, for example, the secondary battle zone. Okay, this is the one that kind of underneath the triangle here. Remember, anytime we see shallow pullback, think trap. Modest pullback, think failure. Deep pullback, what's the problem? It's not location, it's momentum. Wait for the 2-try failure. Bears try once, bears try twice. Can I draw a trend line and buy off that trend line? Do we get lucky and get that trap? Right? Lucky and get that trap. Either way, whether or not we get the trend line or the trap, one of my favorite techniques is to draw a trend line across that high, bring it down off that low, and find kind of like that hidden channel. You know what I mean? It'll come off that low, won't touch that low though. Again, same idea. 2-try failure, right? Stops are now above that high. And again, you'll see a lot of examples of this kind of variation inside that quick start class. You'll see a lot of examples of stuff inside that course. So again, stops now, we know where their pain is, right? Stops above the high. And again, we're now buying into stop losses, right? Now, a lot of times, again, I would love to think we're going to get that first pullback. You know what I mean? I would love to think the market would just behave perfectly like that. It usually doesn't, though. When we have this much of a pullback like this, when it really pulls back deep and it really fools a lot of bears, remember, what's going to happen is the bears are getting stopped out on this. The market will oftentimes really punch. Okay? So when it really punches like that, think about the trap. Okay? Think about a trap as we go. Whenever I see a really deep pullback like this and I grab one of those failures, okay, and it rips higher like this, you don't want to chase it too far, and usually the best entry is that trap, okay, off of that low. So again, 2-try failure, not much new there, but then again, if it really starts to whip and runs higher, watch that trap entry again. Don't worry about where you are. If you have enough momentum going higher, it's almost a guarantee. You'll at least get your 1-to-1 first target, move that stop to point of entry, and then just see how far it'll go. We never know how far the thing will go. The key is just getting it off that channel low, quickly tighten up the stop loss. And again, don't forget, I cover all the trade management stuff. I cover all that stuff in that quick start class, right? So you're going to learn all those techniques in the quick start video. So definitely check that out, and you'll kind of get you up to speed with how we do this stuff here in our trade room. All right, we're looking good. How do we sell this market right now? Or what if it goes lower, right? Same thing, right? Same thing. If it runs lower, if these bears hold the pullback and we jump off the moving average, exactly right. 1, 2, 3, reversal. I'm not going to sell that first one. I will gladly, find my new channel, drill down to a faster time frame, and get short off of that high, right? Makes sense? Again, you got to see some strength coming off of that pullback before we can start looking to short off the top of that channel. And then again, every once in a while, doesn't look as likely on this Nasdaq right now, but every once in a while though, the market will pop down and start to grind. You know what I mean? It'll start to grind and grind and grind, and it'll be basically it'll kind of be torturous because it won't pull back. And you're going, okay, what's going on? In that situation, what's happening is all the buyers who bought over here, they're getting out. Okay, these are usually not sellers selling down here. That's what causes it to grind, right? Because the sellers are going to sell the deeper pullback, right? It grinds lower because the buyers are getting out for whatever reason. When that happens, now, right? Find that new channel. As I always say, draw it tight and look for those traps. Traps, failures, pullback combinations off of that high. All right, so watch that grind as we go. That's some great opportunities for us here if we take this market lower. If we go higher, I could definitely go for that 1, 2, 3 breakout. Remember, again, you don't want to commit just because the initial leg was very strong. Mark that high, mark that low, drill down to a faster time frame again, and buy that first pullback. Targets, of course, up the high of that channel. This could be a great trade. This really could be a great trade. Nice strong pop up, take out those all-time highs, find that new channel, and then just simply trade this channel rotation up to that 15,442. Or if it really rips, you know what I mean? Something happens overnight, the market gets spooked, really rips going higher here, find those traps and grab those traps. Okay, in that example, yes, it is all about the strength of that first leg. Very strong first leg, shallow pullback, higher high in price. Okay, don't confuse this with a strong move up, a shallow pullback, and a lower high in price. That is not the setup. What that is, though, is it is potentially a 2-try failure, right? That is something you want to sell. And that's definitely something to look for tomorrow as well on the sell side, right? We go up, we take out the high. Now, the one thing you want to worry about on this in particular, is that rising support. So the key to this short will be the 1-try, the 2-try, but the trap. Because you guys know, right? Traps are always going to be the most reliable whenever what? Whenever you're worried about location, right? If we have those buyers trying once, buyers trying twice, that trap is great. In this case, it's necessary because we have that rising support, right? I think that makes sense. Traps will allow us to avoid that problem. Or if we see a shallow pullback, like this one right here, right? Shallow pullback, bears once, bears twice, trap and go. Okay, imagine that one right there. You know what I mean? You don't want to sell too close to the range. You want that trap. So that pattern, look forward again, rinse and repeat. That's the best part about price action trading. Once you learn how to trade a range-bound market, trade rotation, it's the same basic setups almost every day. It's obviously there's variations and every day is different, but it's either a range or a trend. And once you know what type of day you're dealing with, then it's just a matter of finding support and resistance and hitting those setups. And again, we talk about all this stuff in that quick start class. So make sure you grab that. How about some gold? Let's wrap things up here on the gold. Gold is another one of those markets that has a rotation off the high right now. Talk about a pathetic example here for these buyers. All kidding aside, though, here let's talk about this. Gold, of course, again had that big move up yesterday into what was probably one of the most recognizable ranges out of all of these markets. We saw that big move down. Right? Remember, that was late yesterday. Well, I guess it wasn't that late, was it? It was 10 o'clock yesterday morning. And as we talked about it, right, the amount that went below, they should have been able to get that high, right? The buyers should have been able to retest those highs there. So the fact that they didn't, the fact that they're failing right now is a big clue. We talked about that last night, right? So, ranges, of course, are magnets. They're balanced. So the amount we go below the range will swing back up to above the range, right? And vice versa. So now what I've done is I've marked up that pendulum swing. And so now that creates some support levels here for us to look for the long side. The challenge right now is going to be momentum, just like on the S&P, right? As we rotate off those highs now, will this end up being a 1-2 right back up? Probably. Right? Or will it end up being a run and a grind? Like I mentioned earlier, weekend gap, right? That closing price from Friday is a nice carrot at the end of the stick for these sellers. Now, of course, there's also a spike in channel on here. You see it? There's that spike in channel. We talked about these last night. And of course, we talked about this today on the S&P, right? There's kind of your spike. It's not perfect. It's not perfect. You can tell it's not perfect because the rotation right there misses. See how that misses? Doesn't make any sense, right? It's not. It should have rotated. The S&P looked beautiful. They got their act together back here, so you can definitely tell it's a spiking channel. And of course, spiking channels tell us what? Spiking channels tell us the base of the channel, right? The base of that channel. Now, if we get all the way down the base of that channel, this market's going to feel like a bear market, okay? There's a big difference between this pullback and this pullback. Right? A very big difference. This pullback was after a very strong run higher, right? So obviously anybody who knows how to read a chart will go, oh, buy the dip, right? This time around, we're failing and coming back down again. Lot more concern, at least in my opinion here, as we go lower here. So a lot of this will be very similar to the S&P, right? If we get a shallow pullback, again, you can see a little support level right there. I have no problem with shallow pullbacks, but I don't want to trade inside the range. So give them once, give them twice, grab that trap, and hit them. And then again, right, if it rips higher here, find that new channel and hit them again, right? Buy that first pullback. And again, I say pullback. We're not generally trading that. That is usually not a pullback setup. All right. If you're in the free quick start class, you know, right? Most of those are going to be traps or failures below the moving average. Then it turns into a pullback. It's all about how you draw that channel. So again, right? Trap setup, two-try trap into that first test is the best test. If we see a much deeper pullback now we're in a great location, but now with all that momentum coming down, there'll be some trend lines overhead here. So we want to give those bears the benefit of the doubt. Remember, let them try once, let them try twice. Don't be afraid to draw that trend line and grab that trend line, or just simply place your buy order right above those highs, right? And let those bears get stopped out and ride that sucker higher. Remember, the range above you is a magnet. So again, it's a failure pattern, two-try failure. Watch that market rip higher, grab that new channel. And as we always say, trade the rotation, right? The rotation, failure, pullback, trade the rotation back to the side of that trading range. Or maybe we see a real deep pullback here. Let me hope we get. Maybe those bears hold the pullback and jump. Again, they haven't done so yet, so I wouldn't trust that first one. But if they do hold it and go, now we mark up that low, mark up that high, drill down to a faster time frame as always, right? We're not going to trade this 1500 tick chart on gold. That stop loss will be ginormous. We're going to drill down to a faster time frame. I'll cover all the time frames for you, along with all the ways to draw the channel properly inside that quick start class linked up in the upper right hand corner, right? You want to look for those. Remember, most common entries on the faster time frame, you're going to be above the moving average. All right. Again, not going to be a pullback entry. It'll be a pullback eventually. It'll be usually a trap, failure, pullback combination off that high. Don't forget, if it does take out that, not necessarily take the low out, but if we start to grind, what does a grind usually mean? It means the buyers who get in back here are getting out. That's why it's grinding lower. When that happens, your job now, find that channel, find those traps, right? Trap, failure, pullback combination. There's easy money to be made on that first trap after the market starts to make that grind, right? And I'll make sure you guys know where to look for it tomorrow if we end up seeing it. As we go higher here, we're already bullish, right? We're already bullish. So, the only real obstacle right now is kind of this area right overhead. I mean, you really could call this like another, sell zone over here. You could call that another sell zone there. Now remember, if we see a strong punch up, I can't just buy that pullback. You can't do it, right? You got to wait for those buyers. Prove it to me that you want this. 1, 2, 3, go, right? So 1, 2, jump off the moving average. Then I can trust the first pullback. We've seen countless examples here today, right? Like that one. It doesn't matter how strong the first leg is. Wait for that 1, 2, 3. And then, of course, we want that first test of the low of that channel. Or maybe it doesn't go 1, 2, 3. Maybe it jumps and starts to run, right? Maybe it really starts to rip and go higher. What do you do in that situation? You don't chase it. You wait for that shallow pullback, that higher high, and you grab that trap. All right, you grab that trap. Now, sometimes a trap comes pretty easily. Sometimes, like I mentioned back here, right? Sometimes it'll grind. You got to get a little bit creative with it. Find that channel, right? And then grab that trap. So there's a lot of ways you can take that trade. Just remember, though, if it goes up and grinds, traps, right? That's your best entry. And usually it'll be a trap into a failure, into a pullback combination. Where's my objective overhead? I got 35.5. Or if we do see that kind of 1-2 go, remember that breakout leg is the measured leg, right? That'll be the initial target we'll use here for those buyers. And then as always, how do we sell it? Get up, take out that pendulum swing, take out that channel high, get those buyers coming in, let them try once, you got it, let them try twice, hit them where it hurts, find that new channel. Again, don't worry about where you are. If you have enough strength on that collapse going back down, the key is you can be aggressive here as long as you have good momentum and a good setup. Okay, that's the key. You can be aggressive. I always tell my clients, there's a time to be aggressive. You want to get aggressive when you've got momentum on your side. When momentum is not on your side, that's the time when you've got to stay patient, either wait for exhaustion or wait for the reversal. All right. When you're a relatively new trader, you always want to think, am I going with the momentum of the market? It's one of the most important things. It greases the wheel. It increases your odds of success. And when you do it that way consistently, it'll grow your account quickly. You know, you'll give back a lot of your gains by trying to go against the overall or the short-term momentum. All right, guys, I've taken up way too much of your time here tonight. Wrapping things up here right now, what do you think? Will we get that reversal tomorrow in the gold? How about the S&P? Will the Nasdaq get that 442 level tomorrow? What do you think? Let me know in the comments section below. Which one of these markets do you think was the first one to reverse tomorrow? All of them? None of them? What do you think? I would love to hear your opinion. And as always, guys, don't forget, 8 o'clock Eastern time, every day, Monday through Friday. I want to see you there tomorrow with me. I want to see you there in the month of September. Remember, September 1st is next week. September, October, November, all the way through the first week of April is prime time. Right? There's no reason why I shouldn't see you in the trade room with me during that prime time part of the year. I'm getting pretty excited for that, right? Early next week. Grab the link, get registered, get the training you need, get the trade room you need to do it with me every day. You can always call the office. I'm always here to answer questions, and you can drop those questions in the comment section or use that live chat on the left, live chat on the right. Don't be a stranger, though. Don't be a stranger. I'm always here to help. If you guys have any questions about brokers or data or trade accounts or whatever you guys have questions with, I've been doing this for a very, very long time. I would love to help you get your career on the right track as well. Well, that's it for me, though. That's it for me. I've taken up too much of your time tonight. Have a great rest of your evening out there. Come back and see me tomorrow morning, 8 o'clock Eastern time. If not, you better come back tomorrow night. We'll do it again because we're going to Thursday and Friday. That's when we'll probably see some of the best setups in the markets here this week. That's all, guys. I'll be back tomorrow. Adios, amigos. Bye-bye for now.